Good morning everyone, and thank you for joining this 2016 year-end call. I am Alfonso Galante and I head up the Strategic Planning, Investor Relations and M&A departments here at Unipol Group and UnipolSai. A bit of housekeeping first. Today's results are still preliminary and are unaudited, as are the dividends. They are still subject to approval before being signed off on the 23rd of March 2017. The overall performance I'm reporting on today represents a period of solid progress against our strategic plan that we outlined in May last year. And I think it's pretty fair to say we have moved another stride closer towards producing high-quality returns for our shareholders and on a sustainable basis. Looking at each of our strategic priorities, we have cause to be encouraged. The Unipol Group has recorded net consolidated profits of 535 million euros. Group profit, net of minorities, is up from this time last year to 330 million euros. Breaking things down, this is how it stacks. Non-life business net results are positive at 381 million euros, due in part to a write-down of 81 million pre-tax on the real estate portfolio. The life business net stands at 263 million euros. Other sectors saw market improvements in their performance despite posting negative results of 116 million euros. Whichever way you cut it, that's an improvement on this time last year. Consolidated net profit at UnipolSai came in at 527 million euros. Group profit, net of minorities, at UnipolSai is 497 million euros. It's probably worth remembering at this point that in 2015 we saw a huge contribution coming from the realized gain in our investment portfolio, and I will deal with the specifics later. First, market conditions prevail in terms of tariffs and margins in the motor business. And as such, Unipol non-life income stands at 7,809 million euros, a touchdown on this time last year. A similar trend pans out at UnipolSai, which saw a slight decrease of 1.6% in consolidated premium income. Encouragingly, Unisalute continues to do well, and we have seen continued growth in the non-motor business. I should add at this point, in our strategic plan, we said we would expand the uses of our black box technology to non-motor lines of business. And we have, through our recently launched commercial servizi products dedicated to SMEs. Broadly speaking, I'm satisfied that our combined ratio at 95.6% for UGF and 96.5% for UnipolSai is in line with our strategic plan. Motor TPL at UnipolSai has seen a very slight increase in frequency and decrease in the average premium, with our combined ratio coming in at 99.9%. In line with our current strategic plan, we have seen something of a hike in the uptake of our black box technology. In terms of our other insurance companies, first up is the continued strong performance of Unisalute, where premium income has increased by 12%, while an already solid combined ratio has further improved to 85.8%, resulting in a net profit for the year of 41 million euros. Next up, Linear continues to improve its performance, increasing premium income and lowering its combined ratio. Arca remains solid and stable and has delivered a decrease in combined ratio from 69.8% to 64.5% compared with this time last year. The total net result of these three companies comes to 73 million euros, well up on last year. Keeping this simple, the numbers are 6,997 million euros for UGF and 5,279 million euros for UnipolSai. Pretty much in line with our strategic plan and with market conditions. Good profitability, still evident here, with the gap between the average segregated account yields and the average minimum guarantees holding at 1.6% and 1.5% for UGF and UnipolSai respectively. On track with the forecast set out in our strategic plan. Continuing progress here in terms of banking business. NPE coverage continues to improve compared to last year. Book value is stable and solid. Couple of points here. Our coverage remains sound. For 2 years back to back, we are seeing a continual decrease in the gross NPE figures. The overall coverage ratio is 45.7% with respect to the total NPE and 57.5% relating to bad loans, sofferenze. No material changes here. At the Unipol Group level, bonds represent 87.3% on the total 62.7 billion euro of investments. The second component being the real estate portfolio, which weighted in at 6.9% of the total portfolio. Cash, equity and funds are a residual part. UnipolSai asset allocation mirrors the strategy. Here is the breakdown. 87.7% in bonds, 8% in real estate, with the rest made up of cash, equity and funds. Overall, a good yield this year with profitability from financial investments stand at good solid level despite less positive contribution from realized and unrealized gains. At the group level, 3.5% on a total basis, life plus non-life, thanks to the positive yields from coupons relating to bonds still in the portfolio. At UnipolSai, we are looking at 3.7% on a total basis. I just want to point out here that we took a write-down of 104 million euros, which, as I mentioned earlier, impacted to the tune of 81 million on the non-life business. The Unhotel deal was done at the back end of the year to the value of 259 million euros. Total equity at UGF is 8.1 billion euro with a change in AFS reserves of 168 million euro, 142 million of which is related to investment in bonds. The same trend plays out at UnipolSai, where total equity stands at 6.5 billion euros with 153 million euro change in AFS reserves. Good news in terms of our proposed dividend. 18 cents per share at UGF and 12.5 cents per share at UnipolSai. On Solvency II, UnipolSai Solo was authorized to use a partial internal model, which has led to a ratio of 2.4 times. On a consolidated basis and using the same methodology, the ratio for UnipolSai will be 2.09 times. For UGF, the standard formula with USP led to a ratio of 1.4 times. Using the same methodology as UnipolSai, the ratio will be 1.59 times. Our year-end results for 2016 are very much in line with our strategic plan, and we are in good shape for the challenges ahead. That brings me to the end of my presentation. Thanks for listening. Let me remind you that our CEO and the rest of the senior management team will be pleased to take any question from financial analysts and institutional investors during the conference call scheduled today at noon CET.